This is the Miller Report with senior market strategist Vince Miller from the Birch Gold Group. Hi, I'm Mark Allen, and today we're going to talk about gold and China. We received an email from William Carter from Seattle who asked about gold and China. China's in the news a lot because they are buying up gold right and left.
Yeah, that's absolutely right, Mark. According to the World Gold Council, China could increase its gold supply by 20% by 2017. As a matter of fact, in 2013, China surpassed India and is now the world's number one gold buyer.
Wow.
Absolutely.
So that means that they import more gold than any other country.
That's right. And the question that I get a lot from listeners when I talk to people is, well, that sounds great, but what does that mean to me? What does that mean to, I'm a construction worker, I am a CPA, I'm an attorney. What does that mean to me in my portfolio? And the real concern that we have with China is that China has begun to limit their exposure to the dollar. And they are beginning to sell foreign currencies, especially the dollar, and they've begun to buy hard assets. Essentially, they've been on a spending spree, selling off the dollar and replacing those dollars with hard assets. Basically, China has gone into the movie theater, yelled fire, creating a sort of a global panic. But it's not really too big in the news over here in the United States. It's not really talked about.
And as they do that, that drives the value of the dollar down.
That's right.
Driving inflation up, and at the same time driving the value of gold up further.
Well, that's absolutely true. What you see happening is when you have a country like China, who is such a big consumer or big holder of U.S. debt. Basically, China is the number one foreign holder of U.S. debt. That's really the concern. And what happened at the end of 2013, back in November 2013, China basically came out and dropped a bombshell on the world, and it wasn't really picked up here in the United States. But of course, this is what we do, so we knew about it. But basically, the central bank in China had decided back in November that it is no longer in China's favor to accumulate foreign exchange reserves. And during the third quarter of 2013, China's foreign exchange reserves were valued at approximately $3.6 trillion. Of course, the biggest chunk of that was U.S. dollars. Now, basically, what's been happening for years is China has been accumulating dollars and working hard to keep the value of the dollar up and the yuan down. Now, one of the goals of that in the past has basically been China wants to keep their products less expensive in the international marketplace.
And that's why we in the United States and the rest of the world keep buying everything from pharmaceuticals to kitchen products. I mean, it's just amazing what's produced in China.
Well, that's absolutely correct. And the problem with China now devaluing or selling off the dollar and moving into other assets besides debt or besides U.S. currency is, of course, what that ultimately will do is devalue on a global scale, devalue the price of the dollar. I mean, have you ever walked into the 99-cent store and you ever wondered how do they make any money on this? Well, it's because it's been cheap for us to buy this stuff.
They may have to change that to the $2 store.
It might go to the $2 store. That is the concern. And in terms of what's happening here at home, the real concern to the average American and people that we talk to every day here on the radio show here or here on our show is, the number one export from the United States in terms of total volume is scrap metal. Okay. Remember cash for clunkers?
Right.
Okay. Well, basically what that was the government's way to give you a tax credit so they could accumulate more scrap metal. And who do you think we sell that scrap metal to?
We sold it to China.
That is probably the biggest buyer of our scrap metal. And of course, what do you think we buy from China?
Everything.
That's exactly right. And that's the concern. And in the past, we had this sort of symbiotic relationship where China would buy the debt, we would buy our stuff from China. But now China is starting to see that the dollar is losing its value. The Federal Reserve is printing or is buying up debt with QE3. They're pulling back. You have the Dow Industrial Average right now at record highs. Gold is cheap right now at a 3.5 year low. Best entry point into the metal market. So it's no wonder that you see, countries like China moving from paper assets into hard assets. Of course, they're going to buy gold. Why? Because it's at a 3-year low. My economy professor back in college used to always say this. My economist class, he used to say, if you don't remember anything from this class, you remember this. And I never forgot it. He says the rule of thumb on Wall Street is that you sell overvalued assets and you buy undervalued assets. And the sentiment that I'm getting when I'm talking to people every day is that the Dow is at a record high, that they're seeing profits on TV but not in their portfolio. Their dollar is losing value at the grocery store. Right now, groceries in 2014 are up 19% in 2014.
Vince, you told me some really interesting historical facts about gold from about 2,500 years ago.
Mark, I'm a history buff, but the one thing that I would tell you is in the last 2,500 years, there's probably been thousands of currencies, thousands of denominations and currencies and so forth. But gold and silver have remained to be the main source of currency that has lasted throughout time, all the way back to biblical days, when 2,500 years ago, when King Nebuchadnezzar ruled Babylon, an ounce of gold would buy 350 loaves of bread. Guess what? Today, an ounce of gold will
buy 350 loaves of bread?
That's right.
Amazing.
350 loaves of bread today.
So even though we have had inflation, we're starting hyperinflation, gold, the value of gold remains the same.
That's right. Mark, today, gas is at a 13-month high. Have you been to the gas station this week?
Yes.
My goodness.
It's ridiculous.
So the trend that I'm noticing is we're seeing the most conservative investor, people who historically made lots of money in other market sectors, like the stock market, like the real estate market, have even hedged into other more conservative types of place to protect their money. It seems to me, from what I can gather, is that they seem to be pulling out of these market sectors altogether. One of my clients recently told me that he just went to Costco, bought a gun safe, and his goal was to fill it up with as much physical gold and silver as he can get his hands on, and he wants to become his own central bank. I think the sentiment is very clear, both from the central banks around the world, when you see the move from major financial powers like China selling off dollars to buy hard assets, of course, gold being at the top of their consumer list. When you see local institutions like the University of Texas a couple of years ago buying $1 billion in physical gold. When you see a few years back, you see Northwestern Mutual Insurance buying $400 million worth of gold. They're not doing this to make money, Mark.
Why are they doing it?
Because gold is a defensive move. It's to protect and preserve buying power against devaluation. That's the reason why you buy gold.
You've mentioned that, food prices have gone up 19%.
Right.
Gas prices at just about a record high from what I can remember.
Right.
It's just under, in Southern California where we're based, it's just under $5 a gallon. It's ridiculous.
Mark, I went through the drive-thru the other day with my daughter, who is 17. Okay, and when she was 3, a Happy Meal at McDonald's cost $1.99. A cheeseburger at McDonald's cost 50 cents. The other day, it cost $1.
That's amazing.
So what we're seeing here now is you're seeing groceries up 19%. You're seeing gas prices at a 13-month high. Medication is more expensive. We're exporting jobs because it's too expensive for American companies to manufacture here in the United States. We're buying everything from China. U.S. corporations basically are Apple, Microsoft. They're keeping huge profits offshore to avoid taxes to bring that money back in the United States. The Federal Reserve is basically printing and buying up debt and increasing our debt more today than ever before. This current administration has accumulated more interest and more debt than almost any other presidency in history.
We also see that magic word, inflation. And I mean, just after World War II, we saw people in Europe. It didn't happen in the U.S., but in Europe, they take wheelbarrows full of money, of local currencies, Italy, France. They take it into the market to buy a loaf of bread.
Yeah. And there was a time where foreign countries stopped taking the U.S. dollar from our government to, of course, for us to pay our debt. And we were paying our debt in gold.
And we don't do that anymore.
No, we don't.
So how do we protect ourselves? How do we protect our portfolio? How do we protect ourselves from pending hyperinflation today?
Mark, that's a good question. What I would do is I would get on the phone right now and I would call a gold specialist over at the Birch Gold Group. I would get on the phone and I would, first of all, I would want to get our gold guide and our silver kit. And I would want to get that off to you right away. And I would call us and I would get on the phone and I would talk to one of the experts here and let them begin to explain. Now, if you've never bought gold or silver before, or if you've been thinking about it for a long time, this is probably the best time in 3.5 years for you to buy. Like I said before, the metals are at a 3-year low. It's the best time in 3 years. I hear this all the time. Regret, regret, regret. I hear people say, Vince, I wish I would have bought gold 10 years ago, 15 years ago, whatever. Listen,
the best time is now.
That's right.
Start. You got to start someplace.
Mark, the best day to plant a tree was 20 years ago. The second best day is today. That's right.
Listen, we want you to give Birch Gold a call. 1-800-355-2116. That's 800-355-2116. And if you have a question, by the way, you can also email us at info@birchgold.com. info@birchgold.com. Vince, thanks a lot for being with us today. We'll be back on our next broadcast. I'm Mark Allen. Thanks for tuning in.
Thank you, Mark.